Most people spend their lives focused on making money. They work hard, save up in the bank, and follow the traditional rules taught since childhood. Study. Get a good job and set aside part of your earnings. But what happens when that money loses value over time? What happens when, despite saving, purchasing power decreases and the dream of a comfortable life seems to slip away? Robert Kiyosaki warns about a silent enemy that erodes the wealth of millions: inflation. Unlike sudden financial crises or market crashes, inflation works slowly and consistently, often without people noticing its immediate impact. The price of bread goes up, electricity bills increase, rent becomes more expensive, and meanwhile, the money sitting in the bank loses value. What once bought a new car now barely covers a used one. What once secured a comfortable retirement now seems insufficient to maintain a decent standard of living. But if inflation has always existed, why do so many still ignore its devastating effects? And more importantly, how do the rich manage to protect themselves from it and, in many cases, even profit from this phenomenon? The answer lies in how you perceive money. The wealthy understand that keeping large amounts of cash idle is a mistake. They don't trust the traditional system that encouraged saving without offering real protection against devaluation. Instead, they invest in assets that appreciate over time, create cash flow, and use strategies that turn inflation into an ally rather than an enemy. In this guide, we will explore how inflation works, why it impacts those who follow the traditional path the most, and what strategies are used by those who truly understand the game of money. You'll discover how to protect your wealth and, even better, how to grow financially even in times of high inflation. Knowledge is the key to financial freedom. And by understanding how inflation affects your life, you'll be one step ahead in ensuring that your money works for you, not against you. To understand how to protect your money from inflation, you first need to grasp how it actually works. Many people believe that inflation happens simply because prices go up, as if it were a natural economic phenomenon. But in reality, rising prices are just a symptom, not the cause. The real reason behind inflation lies in the devaluation of money, and this primarily occurs when governments print more currency without a proportional increase in wealth production. Robert Kiyosaki often emphasizes that inflation is essentially an invisible tax. While ordinary people work hard to earn more money, governments keep creating more currency, diluting the value of what's already in circulation. This means that the money saved in the bank loses purchasing power over time. If today you can buy a coffee for $5, tomorrow the same coffee might cost $7, and the money you saved no longer has the same value as before. But if inflation harms so many, why do some people manage to benefit from it? The answer lies in how the wealthy use their resources. They understand that money itself is not wealth. The real secret lies in assets, investments that increase in value over time and generate cash flow. When inflation rises, assets such as real estate, stocks, gold, and even some cryptocurrencies tend to appreciate. This happens because they represent something more tangible than printed money. A property, for example, remains a physical asset that can be rented out to generate income, regardless of the currency's nominal value. Stocks of productive companies grow with the market and pass inflation on to the prices of the goods and services they sell. Meanwhile, gold has historically been a store of value during times of economic uncertainty. The problem is that most people remain stuck in the traditional mindset, saving money and trusting the banking system. But that model no longer works. Money sitting in the bank is losing value, and those who fail to adapt to this new reality risk seeing their wealth disappear without even realizing it. Protecting yourself from inflation is not just about making more money, it's about financial intelligence. It's about learning how to place your money where it can grow and work for you. In the next segment, we'll explore specific strategies to shield your wealth and even turn inflation into an opportunity for growth. Inflation is a problem for those who accumulate idle money, but an opportunity for those who know where to invest. Robert Kiyosaki consistently emphasizes that the key to escaping this destructive cycle is understanding the difference between assets and liabilities. Assets put money in your pocket, while liabilities take money out. Those who grasp this distinction not only protect themselves from inflation, but also find ways to profit from it. One of the most effective ways to do this is by investing in assets that appreciate over time. Real estate, for example, is a classic hedge against inflation. As money loses value, property prices rise and rental rates can be adjusted to keep up with the increasing cost of living. This means that a smart investor not only preserves their wealth but also secures a growing income stream. Another strong option is investing in shares of solid companies. Large corporations can pass inflation-driven costs onto consumers by adjusting prices while maintaining their profit margins. This means that by investing in strong businesses, your money grows alongside the economy instead of losing value in a savings account. Companies that pay dividends offer an additional advantage, a steady passive income that can be reinvested to accelerate wealth accumulation. Additionally, precious metals like gold and silver have long been considered stores of value. In times of economic uncertainty, when trust in traditional currency declines, these metals tend to appreciate. Unlike paper money, which can be printed in unlimited quantities, gold and silver have a finite supply, making them a reliable way to preserve purchasing power in the long run. In recent years, cryptocurrencies have also emerged as an alternative to monetary devaluation. Bitcoin, for example, was created with a fixed supply, making it a scarce asset. Many investors view Bitcoin as a form of digital gold, a decentralized store of value that operates independently of governments and central banks. The biggest mistake most people make is blindly trusting money as their only form of wealth. True financial security comes from knowledge and the ability to invest in productive assets. While many continue saving and watching their money lose value, prepared investors use inflation to their advantage, growing their wealth and building passive income streams. In the next segment, we'll explore how you can start building this financial protection in practice, applying the principles that the wealthy use to shield their resources from inflation. Now that we understand how the wealthy use assets to protect themselves from inflation, the next question arises: how can you start building this financial protection in practice? After all, knowing what to do is just the first step. The real difference comes from applying this knowledge and transforming your relationship with money. The first step to safeguarding your wealth from inflation is abandoning the traditional savings mindset. For years, we were taught that keeping money in the bank is the safest financial strategy. But in reality, this approach is a trap. When inflation rises, idle money loses value and the interest paid on savings accounts rarely keeps up. If your money isn't growing faster than inflation, you're effectively becoming poorer each year. The second step is developing an investor's mindset. This means learning about different asset classes and understanding which ones best fit your situation. If you're just starting out, you can invest in shares of strong companies that pay dividends. This creates an additional income stream that can be reinvested to accelerate wealth growth. Over time, this money generates more money, and you enter the cycle of the wealthy, making your capital work for you. Another powerful strategy is investing in real estate. Even if you don't have the capital to buy a property outright, there are several ways to enter the real estate market, such as real estate investment trusts, REITs, intelligent financing options, or property investment funds. The key point is understanding that a well-chosen property can not only protect your money from inflation, but also generate passive income through rent. Beyond traditional investments, one of the smartest ways to shield yourself from inflation is by increasing your ability to generate money. Robert Kiyosaki often emphasizes the importance of creating multiple income streams. This could mean starting your own business, investing in education to increase your market value, or developing skills that open up new earning opportunities. The more you diversify your income sources, the less vulnerable you become to economic fluctuations. In the next segment, we'll explore advanced strategies used by experienced investors to turn inflation into a tool for financial growth. After all, while most people fear rising prices, those who understand the money game see it as an opportunity. Experienced investors don't just protect themselves from inflation, they find ways to use it to their advantage. This is one of the fundamental differences between the wealthy and the middle class. While most people see rising prices as a problem, those who understand the system use this phenomenon to expand their wealth. One of the most powerful strategies for turning inflation into an ally is using debt wisely. Robert Kiyosaki often teaches that there are two types of debt: bad debt and good debt. Bad debt is taken on to buy liabilities, such as a financed car, high-interest credit card purchases, or any expense that only drains money from your pocket. Good debt, on the other hand, is used to acquire assets, things that generate income for you. For example, imagine financing a rental property. If inflation rises, property prices tend to increase, and rental rates are adjusted accordingly. This means you purchased an asset with money that loses value over time, but the asset itself appreciates with inflation. While most people lose purchasing power, you are leveraging inflation to boost your earnings. The same principle applies to investing in businesses. If you take out a loan to start a company that generates positive cash flow, the borrowed money becomes a tool for creating wealth. If inflation rises, you can adjust the prices of your products or services, ensuring that your profits keep up with the cost of living. Another secret of experienced investors is the use of scarce assets. As mentioned earlier, assets like gold, silver, and Bitcoin attract investors because they cannot be artificially created like money. This means that in times of high inflation, more people seek these assets to safeguard their wealth, driving up their prices. Those who invested in them before inflation surged end up multiplying their capital. But there is a crucial detail that sets successful investors apart from amateurs: financial education. Simply buying assets randomly or taking on debt without a plan is not enough. It's essential to understand how the system works, analyze opportunities, and make strategic decisions. In the next segment, we'll dive deeper into the importance of financial education and how you can develop this skill to protect and grow your wealth. No matter the economic conditions, the key to protecting your money from inflation and building long-term wealth lies in financial education. Robert Kiyosaki always emphasizes that true financial freedom doesn't just come from earning more money, it comes from knowing how to use it wisely. Unfortunately, most people never learn this in school. We are trained to work, earn a salary, and spend within a budget, but we are rarely taught how to make our money grow. The first step to changing this reality is investing in your knowledge. This means understanding concepts like assets and liabilities, cash flow, leverage, and diversification. The more you learn, the better equipped you are to make strategic financial decisions. Many people lose money to inflation simply because they don't realize there are alternatives to the traditional model of saving and earning a paycheck. Beyond reading books and seeking knowledge, another essential step is shifting your mindset about money. Many people see money as something hard to earn and easy to lose. This belief traps them in a cycle of fear and insecurity, where they avoid investing out of fear of losing the little they have. The wealthy, on the other hand, see money as a tool. They understand that when invested correctly, money can multiply and work for them. Another crucial aspect of financial education is learning to identify good investment opportunities. Many believe that investing is risky, but the greatest risk comes from not understanding where you're putting your money. When you acquire knowledge, you can assess whether a property, a stock, or a business has growth potential. This significantly reduces risks and increases the chances of success. Additionally, developing financial intelligence means learning to control your emotions when it comes to money. Many people panic when inflation rises, selling investments at the wrong time, or making impulsive decisions. Well-educated investors, however, see crises as opportunities. They know that moments of instability are ideal for acquiring assets at lower prices and strengthening their portfolios. In the next segment, we'll explore how you can apply this mindset in practice and build a solid financial plan that works regardless of market fluctuations. After all, inflation can be a problem for those who don't understand the money game, but for those who master the rules, it's just another piece on the board. One of the biggest differences between millionaires and the middle class is how they handle times of crisis. While most people worry and pull back, experienced investors see opportunities where others see problems. Robert Kiyosaki often reminds us that great fortunes have been built during periods of economic uncertainty. Why? Because inflation and crises redistribute wealth, and those who understand the financial game know how to position themselves to come out stronger. One of the fundamental principles of millionaires is never relying on a single source of income. During periods of high inflation, those who depend solely on a paycheck suffer the most, as their purchasing power rapidly declines. The wealthy, on the other hand, have multiple income streams, such as real estate investments, business ownership, dividend-paying stocks, and companies that continue to operate regardless of economic conditions. This means that as prices rise, they own assets that also appreciate in value, ensuring a steady cash flow. Another crucial factor is mindset. While most people panic when prices skyrocket, successful investors analyze the opportunities that emerge. During periods of high inflation, many assets become temporarily undervalued due to market instability. These are the moments when the wealthy buy properties at lower prices, acquire undervalued stocks, and make investments that will generate substantial returns in the long run. Additionally, millionaires use smart tax strategies to minimize the impact of inflation. They understand that governments often raise taxes to compensate for currency devaluation, so they structure their investments in ways that legally reduce their tax burden. This might include investing in sectors with tax incentives, managing assets through business entities, or even diversifying internationally to protect their wealth. Another lesser-known secret is the strategic use of leverage. While most people see debt as something negative, the wealthy use it to multiply their investments. As previously mentioned, if you finance a rental property and inflation rises, the property's value and rental income increase, while the debt itself becomes relatively smaller over time. In this way, inflation shifts from being an enemy to becoming a tool that works in the investor's favor. In the next segment, we'll dive into the practical steps you can start applying today to structure your protection against inflation and move toward financial freedom. After all, it doesn't matter where you are right now. What truly makes the difference is what you decide to do from this point forward. Now that we understand how millionaires use inflation to their advantage, let's explore practical steps you can start applying today to strengthen your financial protection. Regardless of your current income or the stage you are in your financial journey, there is always something that can be done to improve your position. The secret is to take consistent and intelligent actions aligned with the principles that protect and multiply wealth. The first essential step is to eliminate the dependence on idle money. If you have large amounts saved in a savings account or checking account, you are literally watching your wealth lose value every day. Instead, direct these resources towards assets that have growth potential. This does not mean investing everything at once or taking unnecessary risks, but rather learning to move your money strategically so that it works for you. The second step is to create a positive cash flow. As Robert Kiyosaki teaches, financial freedom does not come from accumulating money, but from the ability to generate passive income, that is, money that comes in without you having to actively work for it. This can be done in several ways, such as investing in dividend-paying stocks, acquiring rental properties, or even creating online income sources, such as digital businesses or royalties from products and content. The important thing is to structure a system where money keeps flowing into your account, regardless of inflation or economic crises. Another crucial strategy is to protect your purchasing power by investing in assets that keep up with or outperform inflation. As we discussed earlier, gold, silver, real estate, stocks of solid companies, and even cryptocurrencies can play this role. The key is to diversify, ensuring that your money is protected on different fronts, reducing vulnerability to any sudden changes in the economy. Moreover, one of the most powerful steps you can take is to increase your own ability to generate wealth. This means investing in yourself, learning new skills, developing financial intelligence, and exploring ways to increase your active income. Many people underestimate the impact that a small increase in knowledge can have on their finances. The right course, a well-applied skill, or a strategic connection can open doors to new financial opportunities. Finally, it is essential to adopt a long-term mindset. Inflation and economic cycles will continue to exist, but those who prepare and understand the rules of the game will always find ways to thrive. Building wealth does not happen overnight, but through smart and consistent decisions over time. In the next segment, we will discuss how to turn this new way of thinking about money into a lifestyle, ensuring that your protection against inflation is sustainable and that you can continue growing financially, regardless of market conditions. Once you start implementing these strategies, something powerful happens. Your relationship with money transforms. You stop being a victim of inflation and begin to see it as a predictable factor within the financial game. But for this change to be lasting, it is essential that this new way of thinking becomes part of your lifestyle. A common mistake among people who start investing is acting impulsively, chasing quick gains, or trying to predict the next big market move. However, successful investors, those who truly protect and multiply their wealth, understand that the key lies in consistency. They don't try to get rich overnight. Instead, they follow a solid and well-structured plan, regardless of market fluctuations. Part of this plan involves continuously monitoring your finances and assets. Protecting yourself from inflation is not a one-time event, but an ongoing process of adjustments and optimizations. The economy changes, opportunities come and go, and those who stay alert can seize the right moments to invest more, reallocate resources, or expand their income streams. Another crucial point in maintaining this new mindset is surrounding yourself with the right people. The environment you are in directly influences how you think and act. If you are surrounded by people who fear money, believe investing is too risky, or only complain about inflation without seeking solutions, it will be difficult to maintain financial discipline. On the other hand, if you connect with experienced investors, entrepreneurs, and people who value financial education, your chances of success increase exponentially. Additionally, it is important to always maintain an emergency fund. While we've discussed avoiding idle money, having liquid funds for unexpected expenses is essential. This reserve ensures that you won't have to sell assets at the wrong time or take on bad debt in emergencies. The key is finding a balance between security and growth. Finally, one of the most valuable aspects of this journey is the freedom it provides. When you protect your money from inflation and build passive income streams, you begin to free yourself from dependence on traditional work. This means gaining more control over your time, your choices, and your life. And ultimately, that is the true definition of financial freedom. In the next segment, we will conclude this journey with a reflection on how these strategies not only protect your money, but also create a future of stability, growth, and abundance. After all, true wealth goes beyond money. It lies in the freedom it can provide. If there is one fundamental lesson in Robert Kiyosaki's teachings, it is that money is not the ultimate goal. It is merely a tool. The real purpose of learning to protect your money from inflation, invest wisely, and create passive income streams is not just to accumulate wealth, but to achieve freedom. Freedom to choose where and how to live, to dedicate time to what truly matters, and to not be at the mercy of economic fluctuations or the decisions of governments and central banks. Inflation is an unavoidable reality, but you don't have to be a victim of it. While most people follow the traditional path, working more, saving, and watching their money lose value, those who understand the rules of the financial game are constantly expanding their wealth and creating more opportunities for themselves. They don't fight inflation. They use it as a driver for even greater growth. The difference between those who thrive and those who suffer from inflation is not how much money they earn, but how they use that money. Those who learn to invest in productive assets, diversify their income sources, and apply smart strategies build a shield against monetary devaluation. More than that, they turn economic challenges into opportunities for growth. If you've made it this far, you've already taken an important step: awareness. You now understand that keeping money idle is a mistake, that the wealthy use inflation to their advantage, and that there are concrete strategies to protect and grow your wealth. But knowledge without action does not create change. What will determine your financial future is what you do from this moment on. So start now. Assess your financial situation, study assets, explore ways to increase your income, and begin moving your money strategically. Small, consistent steps can lead to significant results over time. Remember that financial freedom does not happen overnight. It is the result of well-made decisions throughout life. In the end, the question is not whether inflation will continue to exist. The question is, will you be prepared for it? The decision is in your hands. We've reached the final point of this journey, and now the question that remains is, what will you do with this knowledge? Many people understand that inflation is eroding their money, realize that the wealthy play a different game, yet still remain trapped in the same system that weakens them financially. The difference between those who prosper and those who keep struggling to maintain their standard of living lies in action. Robert Kiyosaki always emphasizes that true wealth is not in money itself, but in financial education and the ability to make smart decisions. Protecting yourself from inflation is not something reserved only for major investors or millionaires. It's a strategy accessible to anyone willing to shift their mindset and apply the right principles. If there is one essential lesson to take from everything we've discussed, it's that idle money is always losing value. If you want to ensure a financially secure future, you need to make your money work for you. This means investing in productive assets, building passive income streams, and diversifying your strategy to shield yourself from economic fluctuations. But perhaps the biggest takeaway is that inflation, which scares most people, can actually be an ally when you understand how to use it to your advantage. Those who learn to invest in assets that grow over time, generate income from multiple sources, and use leverage strategically don't just survive economic downturns, they profit from them. The next step is in your hands. You can continue following the traditional model, hoping things will improve on their own, or you can take control of your financial future. The decision to protect yourself from inflation and build wealth doesn't happen all at once. It happens through small, daily choices. The sooner you start, the faster you'll see results. So I leave you with this question. What can you do today to take the first step toward financial freedom? The knowledge is here. Now it's up to you to apply it. Your financial future depends on what you do now, so start.